Good morning, this is Dyer Kennedy from Divergence Analysis. Today we're looking at a few charts on the Nasdaq futures contract from yesterday, June 29th. We're starting to see a lot more volatility in the market, uncharacteristically for the summer, but a lot of the global events are causing this. Wanted to briefly go over a question that's been coming up with a lot of our clients and trial users, and that is after a confirmed signal, which I'll go over first, but after a confirmed signal, what are good points to look for confirmed re-entries if you were to exit out of your trade making a little bit of a profit, or if the trade doesn't go in your favor and you have to take a stop loss. What's a good point to re-enter and be confirmed that the trend is still in that direction? So first I'll have just a little recap on a confirmed signal initially. This is a 1-minute chart of the Nasdaq yesterday morning, right before the noon hour, and there are a few good examples of some confirmed signals. What we're looking for on the long side is green histogram bars in the short-term trend, meaning that the short-term trend should be up. Green price bars, meaning that buying pressure is dominant. A green arrow, meaning this DVAN signals as the velocity indicator is crossed up. So those conditions would equal a confirmed long. On the other side, a confirmed short would be red histogram bars on the short-term trend, red price bar, meaning selling pressure is dominant at that point, and then we see this cross, which is plotting the red arrow across the velocity signal on DVAN signals below. So now I want to focus on re-entry points after the initial trade. There's an immediate bounce after this initial long trade, and depending on your risk level and time frame that you want to be in the trade, you could maybe have a profit target or another risk management or position management tool that you're using. So if you were out at this point, hypothetically, good places to re-enter are looking for the leading line, which is the blue line in the short-term trend indicator, the middle indicator with the histogram. You'll want to see that line be initially above zero, cross below zero, and then at the point that it crosses back up, which is barely this point, that's a really good re-entry signal telling you that while the short-term trend is still in the upwards direction as indicated by not only the short-term trend green histogram bars but also the DVAN signals line remaining up, we've seen a pullback and then a resumption, a resumed force back up in the direction of the trend. So this would be a really good re-entry point, and you get an initial hit. These are really good points to look for imminent moves in the prevailing trend direction. You'll see again that we're up in the leading line. The leading line just barely crosses below zero here at 12:02 and then moves back up above zero. That's another good re-entry point. For re-entries, it doesn't matter as much that the price bars are in the same direction, because we are looking for a move immediately in our trend direction. We're going to be a little more sensitive with exits on re-entries as well, because the trend could be coming to a close. In this case, these are two really good examples of some follow-through that you should be profitable on. If you take the initial move, or if for some reason you missed it, these are two good points to get back in and capitalize on that up move. There's also a good example on the 3-minute chart from yesterday morning. This is the same time period, just before the open to about noon. I wanted to focus on this downside move. It looks kind of choppy. It would be kind of difficult to hold that entire short trade on a 3-minute basis, especially with some of these chops back up. There are good opportunities to take some profit here though. So here's an initial short. It meets all of our short criteria. The short-term histogram is red, meaning that the trend is negative. We're getting a cross of the DVAN signals indicator below, which is plotting this red arrow, and we have red price bars. We get a nice initial hit. Places to look for re-entries after that initial hit down are, as you can see, right here. And this kind of consolidates for a while. You're probably going to be able to hold through this period, but for some reason, if you weren't, you'll see the leading line was down, pushed back up, and moved back down again. This is a good re-entry point. If you were able to hold, this is a good re-entry point. These re-entry points are also very beneficial points to add to your position if you're trading multiple contracts. You could put on an initial contract here at this point, which is 10:12 a.m. Eastern Time. And you can add to your position with another contract at 10:21 or 10:27 when you're getting some confirmation. Another good re-entry point, as you can see, the leading line is down, moves back up above zero on the short-term trend indicator, and then breaks back down right here. These re-entry points are going to be quick, and they're going to get you in at very favorable points to the up and down side. As you can see, this re-enters your short side trade before you even see much negative movement in price or volume to that point. So if you were to start seeing the green bar interacting with the trend, which is a good place to stop out your trade, you could immediately put another contract back short here and experience that immediate fall for some extra capitalization on the short side move. Hopefully that helped. If you have any questions, please feel free to email us at info@divergenceanalysis.com or visit DVANSmartLines.com for more information. Thank you.